All right, folks. Welcome to this week's Forex commentary. And yeah, this recording is currently done on Sunday, not my regular market open on Monday. Okay, so yeah, so this is dollar index. This is the monthly time frame. Okay, and at the start of July's trading, we were talking about, this fair value gap here being, the drawn liquidity. Say I wanted to see dollar index trade into the monthly inversion fair value gap, and we saw the dollar index last week trade into this gap, which was okay. It's good that the market trade into this gap, but price action wasn't easy. It was back and forth, primarily consolidation. If you look at Euro USD, if you look at USD CHF, right? But the yen were very explosive. So, and that's why a lot of times I really like to trade the yen, because if they're gonna move, it's just very one-sided market in the yen. Okay, so that being said, okay, this is the monthly time frame. Now we're at key resistance level, and I still think the DXY is going to trade lower, even though I understand that currently markets aren't trading in line with data, with the COT hedging program and other factors, or other um, quantitative analysis I would put into consideration to define the high time frame institutional order flow. And it's kind of very weird because it took me about a couple weeks to adjust. That was in June. I found it very difficult trusting price action, because it's something I've worked with for years, and to now see the market just entirely just act aside, it is incredibly uncomfortable, right? So now currently dollar index is here, okay, and we're going to go through the weekly time frame. Mind you, I am still eyeballing the markets trade into this range here, this old fair value gap and this fair value gap here, like this range. If you extend it forward, right, I want to see the market straight here. But for now, like the early portion of July, we wanted to see DXY make a retracement, and for a fact it did make the retracement after the market traded below June's low. So you want to note this, okay? Okay, because June's candle traded bearish and closed strongly bearish, okay? And I think the commentary, the last one I made was in June. I made it for June, I think June 30th or so. So obviously we had June's candle. I was talking about dollar index while June was still trading, and saying the commentary will be for July, right? So it closed heavily bearish, and of course, market trade below previous monthly low, which makes sense because of this. Market had to continue in this momentum for the early portion of July, and that would be June's low first into the weekly fair value gap I pointed out, right? And after that happened, we began to see the market show sponsorship on the daily time frame and the 4-hour chart, and markets finally trade into this monthly inversion fair value gap. So here is the weekly gap I was talking about, saying we should use this to manage our expectations, because at the start of the week, market started bearish and closed with a heavy rejection, right? And now settled like this, prompting last week to be bullish, because we're going to look at daily time frame, and we're going to see how daily time frame market structure and price action determined that last week was going to be bullish on dollar index. So on the weekly time frame, markets are now at the monthly inversion fair value gap, and this was this April's low for sell side new and premium array, okay, and this is April's low here. All right, So now we're at key resistance level, and you see the market is priced in a swing low here. So market priced in a swing low here. We are at resistance, and we think the markets are going to continue downside for the month of July. So for July's trading, there isn't any confirmation yet on the weekly time frame that the markets are going to continue to go lower aside from market structure. Okay, so if you want to look at the markets based off of market structure, you can say based off of market structure the market could sell off from this level here. Okay, but in terms of the weekly range, because if you want to take high probability trades, it's more like you act after the fact, like after markets validate your bias. That's when you act, instead of more like I'm going to predict the market will do this and that. Okay, there's a difference between those two. So currently there's nothing that is validating shorts on the liners this week, especially for the fact that we have a swing low price in here. And because of we have a swing low here, there's every likelihood and chance that we see the market trade into the previous weekly high first. I understand that we are already at the monthly inversion fair value gap, but there is no rule book that says the market will sell off immediately when it gets to the monthly inversion fair value gap. The markets could completely trade into the monthly inversion fair value gap, or the market could determine that its premium array for an optimal sell-off would be from the weekly bearish order block. So there's no telling where the market is going to sell from. It's all speculative. Okay, we have this level here, we have this level here. Markets are currently digging inside this weekly bearish order block, and it's all speculative. And when we go into the daily time frame, we're going to investigate price action. We're going to see things on daily time frame that could mean that the markets could potentially, in fact, trade above the previous weekly high, because this is a very strong green candle. And if the candle is green, and if you look a little bit here, if you look here, so you see we're above that fair value gap, this weekly gap. So this becomes an inversion fair value gap. So the markets could trade back into here and offer more buy side, more upside to the markets. So I think the ideal scenario would be to wait on a long-term basis. Okay, just on a long-term basis. On a long-term basis, I mean, like if you want to trade the bulk of the weekly range, like a one shot, one kill, I think we have CPI on Wednesday. So for CPI, I think the market would have had its fill, do whatever it wants to do internal range, and would obviously know what the markets are gonna do post CPI. So first off, we have this inversion fair value gap on the weekly time frame, although dollar index bearish because we've traded into the monthly inversion fair value gap. It's bearish because market structure now, even on the monthly time frame, is bearish. Okay, that's what it is. So if you want to look at market based off of what you see based off of qualitative analysis, the market's bearish. But currently, July's candle is green. Okay, and we traded through June's candles low, and we have a swing low on the weekly time frame. So it's either the markets want to trade into a premium first and sell off. Okay, now what's the first premium array I'm going to put into consideration? First, the previous weekly high. Okay, because now that we have a swing low, I want to be looking at what the markets are going to be doing above the previous weekly high. So if I go to the daily time frame, I'm going to look upwards of the previous weekly high and see what PD arrays or what levels the market are likely to reach for a continuation to the downside on dollar index. So that being said, this is the daily time frame, and we're still back at our discussion the last commentary when I said the markets, there are lots of inefficiencies like here and here, and we see the markets haven't traded up here yet. So this is still a possibility that the market trades into a premium first before any sell-off, if the markets are going to be willing to sell off. Okay, and notice something. Um, at the start of the week, I talked about dollar index, last commentary. You notice that markets didn't start its retracement until the markets trade into the weekly fair value gap first, which apparently was the nearest draw on liquidity. Okay, because I talked about how we need to eyeball this level first to manage our expectations. So since the market wasn't going up first on Monday, so and market closed bearish, so this was the draw and market hit it on Tuesday. Now, having market hit the draw on liquidity on Tuesday, we began to see market structure shift to validate, a retracement back inside the range. Okay, you'd see via a change in the stating delivery on the hourly time frame, and then you see the swing low form on dollar index. So this was Friday's trading, the upper week Friday, and of course we have a swing low, we have an auto block, and market just very, very, very good delivery. Really, very good delivery on dollar index. Very good delivery. So that being said, there's nothing yet on the hourly time frame that I'd like to take your eyes to, because based off of the weekly time frame, we're at key levels on the monthly time frame, but there's nothing saying there's going to be a continuation to the downside yet. And there's every chance that the market tries to reach for this inefficiency. And since there is CPI on Wednesday, it will be ideal for any, if you want to trade off of the weekly range, the bulk of the weekly range, one share, one kill type shit. I think it will make sense you wait for CPI, right? So Euro USD consolidation, terrible price action, but markets has been delivering downside, in fact, but this is very terrible. This is extremely terrible, not gonna lie. I took shots on Euro USD, profitable shots, of course, but very frustrating, very, very frustrating. My first trade, I think it went up to like 80 pips, and then I eventually collapsed at about maybe 50 pips. I wasn't watching really, because very heavy retracement after the met in near-term objective, and I think I closed about 50 pips. Then I scalped on, I think on Wednesday or Tuesday, I scalped some 20 pips. New York session, on Wednesday, I guess. And I think my best trade last week was on GBP from Monday. It was incredibly insane. Yeah, I think 200 pips ish plus. Basically, the weekly range. Okay, I basically captured the weekly range from Monday to Wednesday. Yeah. So on Euro USD we have this fair value gap here that we are eyeballing, and of course I was looking at Euro on 3 months time frame, and I was saying how the markets showing the last 3 months was very bullish on Euro USD. Markets close above this gap. Essentially, Euro USD is bullish, and I'm thinking the markets could potentially, and that's probably why the market's behaving the way the market's behaving. The markets could potentially trade into this gap. That's what I think. Really, I have this strong, I don't know, it's a feeling that markets want to trade above here, because this is low resistance liquidity run, and honestly I would rather be looking for short above this high than when Euro USD trade above this high than looking for shots at this level. I'm not saying it can pan out and stuff. It can pan out, of course, but for now it's going to take a lot for me to qualify any shot from this level here. So I think the markets are likely to trade above here. This is low resistance liquidity run, and I think the markets will just go through this level. But that's not my concern for now, because since there's that, and July is yet to express itself as bullish, it means we have lots of opportunities that's going to form up in Europe. Okay, and there's levels here, levels like this. You can see this gap, this old gap here. the market's back here, back at it, and although it doesn't mean anything by itself because um, we don't know how the markets are going to trade yet. And we have the swing high form in Euro USD. Okay, this swing high, or say the short-term high form in Euro USD. But we're bullish on Euro USD because market structure is bullish. And the drawn liquidity on the monthly time frame, which is the monthly fair value gap, you can see this tiny bit of fair value gap here. It's the drawn liquidity. I think the markets are going to get there, right? Overlapping it, we have this weekly fair value gap here on the weekly time frame. So I think the markets are going to get up here. So thinking about that, and we have a short-term high form, and there's a possibility that the market drops a little bit lower because now this is a swing high, but also this is a bearish shadow block. Okay, so this is how we identify all blocks back in the day. This is a bearish shadow block, this is a swing high, and markets could make a retest and trade into the previous weekly low. Now mind you see I'm not putting so much consideration of how I'm trying to manage my expectations. Is I'm just aiming for the previous weekly low when the markets open. Say markets open, trades into previous weekly low, or it opens up and trades into the previous weekly low. And why do I think this is high probability? So why do I think this is high probability? Because when we looked at dollar index, we saw dollar index trade above its some old weekly fair value gap, and if there is any chance dollar index is going to try to open lower, like the opening range in dollar index, if it opens lower, then there's a chance it goes lower to go higher, then trade lower again. So if I were to draw like a schematic of how I think the range is likely to unfold, say we have a gap and market gaps lower, or say market opens here, trades lower, goes high, forms the high, and sell off and close and stuff like that. Now this is a crude depiction because obviously this is not supposed to appear like if this were an actual bar, but I'm just trying to show a kind of like diagram of what I think it might look like. Except we just go up first, open, we go higher first and trade lower and close. Now when I do this, obviously I do not expect dollar index weekly candle to be that much because most of the times when markets hit objective like this, because we've met objective looking at the monthly time frame, and now that we're trading to premium, sometimes market can stay in consolidation. Okay, and that's the reason why it will be crucial to observe until like Wednesday-ish before you can now like maybe increase your risk. If you're doing anything at the start of the week, I would just advise just assume little risk because there is a whole lot that could happen. DXY could sell off exactly from here, from the monthly inversion fair value gap. That's very, very possible. Anything is possible. But based off of price action, because we are discussing price action, not trying to predict what markets might do or whatever markets wants to do, just based off of price action, it looks like we could still see the market trade into sell side, the previous weekly low here, and possibly market possibly closes this fair value gap. I don't know. I'm not putting that. That's not priority for me. My priority now is to see if the markets can trade into previous weekly low possibly first, and I wait. And if that happens and CPI happens and we have some sort of validation on the 4-hour time frame, then I'm going to engage on like a short-term trade to see if the markets want to make a continuation this week to the upside. Okay, now that being said, on the daily time frame, I've had this gap marked out. This was my objective last week. Okay, this was sell side objective, but the market has been shy of this sell side objective, and currently we're seeing Friday's trading being indecisive. Okay, so if this is indecisive and this is objective here, well, that'll be a lot of interest for me because this is previous weekly low sell side, And I told you on dollar index that my interest in shorting dollar index would be from its previous weekly high, because now we have a swing low priced in, and if the markets can go above the previous weekly high, I begin to look for premium arrays on the daily time frame that could, mean bearish for dollar index. And for Euro USD, this is the level. Okay, this is the level I'm eyeballing, because we're at monthly support, weekly support. That's the weekly fair value gap. Monthly support, that's monthly inversion fair value gap, which I showed you earlier on. And we are very close to the daily discount level, which is the daily fair value gap. Very close to this high. I don't know if the markets are going to trade here. I don't think the markets can reach for this level. I don't think, because there's a lot of strength on the euro pound. Okay, when you see the euro pound, you see there's a lot of strength, and that's the reason why it's been very, very difficult to see the euro trade low. Okay, very, very difficult, very, very difficult. So let's quickly run through GU, because 2 weeks ago I wanted to see dollar index and and so forth. I wanted to see them trade inside the range first, but the early portion of that week was bearish for DXY and bullish for foreign currencies like GU, EU, and stuff, right? And you can see market trade above previous weekly high. You see why market trades above previous weekly high. You want to wait, especially in this context. The draw, we were expecting the markets to make a retracement, so the draw on the crude was internal range. Okay, internal range. Although the market had to meet external range objective first, which was previous weekly high, and market just tanked. So it was just one day. This happened in one day. Okay, it happened one day and market went quiet. But since dollar index was bullish last week, because we had not seen DXY begin to make that retracement we wanted to see into those inefficiencies, so obviously pound would be bearish. So, but I wasn't interested in pound last week because one, we already traded into an objective, and I don't know if they are going to be willing to reach for more sell side objective. To classify objective is really no biggie, because you can always classify objective, but it has to be rooted in sound logic. Okay, so I did not know how pound was going to trade last week, so I just stayed off pound. But on the monthly time frame, just want to show you real quick so that you can have you can really understand where we're at. So first off, this is the monthly bullish order block on GBP USD. Market closed above, market made a retest of it. Now, the early portion of July, market ran above previous monthly high. So it's to show that this month is really like a consolidation, because how do you get a very one-sided month in the last month, and suddenly market trade above the high, and essentially just giving up all of the gains from last month's price action. So it's kind of like, it's crazy. It's crazy. It's just showing that pound is like in some form of consolidation, and when markets begin to consolidate, usually they return back to old key levels or key levels and stuff. So there's a chance we see pound return into the monthly bullish order block. There's a chance that happens. Okay, there's a chance that happens, or not really. It just depends on how DXY responds this week, because this is an order block, and markets are currently inside the order block. So I don't know how pound is going to respond to the effects of dollar index this week, or I don't know how the dollar index eventually is going to trade, because I stated my arguments on DXY, how we want to be careful for the early portion. But first off, we want to see DXY trade into the previous weekly high. Okay, above last week's high is ideal for shorts, but only after the market validates the high time from institutional order flow, because institutional order flow based off of qualitative analysis on dollar index is bearish. Okay, looking at candlesticks, we see DXY is bearish, and now markets are trading into a premium, the premium we highlighted in prior commentary. So we want to see them validate buys now, the weekly range, and then we can engage. But when you look at the 4-hour time frame on G, you're going to see something interesting. There's this gap here. need this one for me. I need it for me. Sorry. So we have that. So let me take away this monthly order block, and anyone who sees this would know that okay, markets kind of trading off of the monthly order block here. So even if dollar GU trades into this level, this is still something, because this is the balanced price range, and the market might be trading lower to rebalance this inefficiency here, because now we have buy side delivered here, but this level is void of sell side. So it makes sense if pound keeps digging inside the range and still maintains this low. Okay, still maintains this low. I said markets could want to return into the monthly order block, and there's this low, very low here is a monthly order block. So they might return very deep into last month's range, but not just run the low entirely. That might not even happen. Okay, so just because of this inefficiency, and I think this might be the draw on liquidity, internal range draw on liquidity. So this was USDJPY. I think I talked about USDJPY in the last commentary when I talked about some sell-off into sell side, okay, because I knew DXY was bearish, and in terms of price action, USDJPY on the daily time frame, as at when we're discussing USDJPY, was bearish. Okay, we had a change in state in delivery, we had an order block here, and the markets were returning into it on Monday, so it was clear that we're going to see sell side. But by the time USDJPY traded into sell side, okay, DXY traded into the weekly fair value gap, and it was obvious that the retracement was going to happen. So this was my own setup on USDJPY. Okay, this was my own setup on USDJPY, and my setup on last week on GBPJPY, and my setup the previous week on CAD-JPY. I only aimed for these levels here, but the yen has been very explosive. I couldn't get in this one last week, so I favored pound. Okay, I favored GBPJPY from here and collapsed my trades here. Okay, from the close of the prior week, there was a foul change state in delivery, and there was a gap. I didn't trade this on a Friday. Okay, this was a Friday because I know the main objective and they're likely to return back into range. So I waited till Monday, and Monday, we had a turtle soup, a change state in delivery, return back to order block. Very easy trade. Why this was very, very stressful, because when I executed, the market just consolidated and it was non-farm payroll, and yeah, so that was it. So because of I was looking for DXY to return back into the range, and that's why I was able to go long on USDJPY, right? And currently I think this high here first, this high, I was a long-term fanatic that the markets are gonna get here, but I don't know really, because one time you're bearish on the yen, one time the market's bullish. It's really frustrating. So I can't really, I can't say how the yen are gonna trade in the coming week, except for the fact that we still have potential for dollar index to return into the previous weekly high buy side, so that might influence some upside momentum on USDJPY. But when I look at the weekly time frame, I see something very familiar, that market eventually now closing above this gap. I was looking at this for a long time, and market keep disrespecting this level, but now we're seeing a close here, and see how the previous oh shit see how the previous weekly candle closed bullish, and we're expecting a retracement on dollar index. So this was like leadership for as per relative strength. This was leadership, and already gave off that we're going to see upside on USDJPY last week. So now we're both here. This doesn't really mean much, but these highs here look very, very clean. They look very, very clean. So I may have been a long-term fanatic of that level, but I think this is more likely to pan up. Okay, I think this is more likely. So above buy side liquidity here, I do not know. Let me take this one off again. So above buy side liquidity here, I do not know, because this level isn't just previous weekly high. This is old monthly levels. Okay, these are old month. This is high in May, and this is the June's high. So these are previous monthly highs. So, and if DXY is bearish on the long term, and we're likely to see the yen follow suit, but it's not reflecting yet. They've just been in consolidation, right? So I think above this high would classify a good shot. I don't know if the markets are going to trade here. Okay, I don't know if the markets are going to trade it, because above this high we have this breaker here. Can you see this low, high, high, this high to this high, this low? So this is a breaker. So this is a breaker. So you see exactly at the breaker. So now that there's that, I really don't know what's going to happen, but I think the markets might possibly just trade here. Okay, so really nothing on the 4-hour time frame, because I don't know how this markets are going to open. Okay, I know that 4-hour time frame obviously is bullish, and if maybe peradventure they try to go for sell side first, then that would be very good opportunity, but I don't think so, looking at price action currently. And that's why I like to wait for market open, so I can see what the opening range says. If the opening range is bullish or so, then it'll have been a lot more easier, right? So so yeah, that concludes the commentary. And let me just say a few things on gold. Okay, I haven't talked about gold in a while, and so I think the last time I talked about gold, I talked about how markets could potentially trade below this low for sell side. Okay, and below this low Tory soup, and gold was like bullish. I think I posted some execution on Twitter, and now we had this 1, 2, 3. This is a 3 drive. Okay, 3 drive is a classic retail. Whatever. When I mean retail, I mean is a classic pattern everyone knows in retail industry, right? For reversals or retracement. Okay, it's usually reversals when it's in line with the high time from institutional order flow, but gold is usually bullish, so chances they use it to reverse is very, very low. But for a fact, they are likely to take out internal range. Okay, so the retracement will take out internal range, and primary internal range would be this middle, like you have 1, 2, 3, this low internal range. Yes, market will take it. So it would have been a reversal if the market took this one entirely. Now we have like some relatively equal lows here sitting here, which is very interesting, because how do we have relatively equal lows here and gold is bullish? Because someone would think, I thought too, that okay, we could see gold take out sell side first. Okay, because I when gold was selling off here on this day, I wanted to see gold take out sell side here. Then I positioned for buy setups. Okay, but that did not happen, and we had bullish days, inversion here, making this level here high resistance, a change in state in delivery, making this level here high resistance. But when gold began to consolidate here and closing below this fair value gap, it seemed like they were going to trade here, but no, they didn't trade there. Okay, they only trade below previous day's low, and continued bullish. So it's like very, very tricky, and that's why personally I don't like thinking about or speculating gold at all. I mean, for sales, because majority of the things you want to be thinking out is previous days high, previous days low, especially when gold return into a discount. Okay, once they trade below previous days low and gold is at a discount, that's ideal levels for buys. Ideal levels for buys. Just blending time of day, change day in delivery, and you have very good setup, very, very good trades. So currently on the weekly time frame, gold is bullish. Okay, I'm sure you can. I don't know if you can hear the noise, infrastructure issues here. There's a siren from when light comes on, banding my ass. Anyways, so we have a swing low here on gold. Okay, we have this low here, higher high, are we higher low to the right and higher low to the left. So this is some swing low here, and it's looking bullish because The monthly bias is bullish on gold. My monthly bias is bullish on gold. I want to see gold trade bullish this month. Okay, I want to see gold bullish this month and go through this stuffs here, this weeks, and so and we have a solid bullish close in July for July's candle. So this is a very good sign that gold is bullish. Plus, this is auto block and stuff, so it looks bullish, still very bullish. So, but price action is these folks will trade however they want to trade. But I think that currently I would regard this as a territory below here and return to the same fair value gap. And I would say this run lower here is to reclaim this gap. Not sure markets are going to return into this relatively equal. If they wanted to do it, they had last week to do it, to manipulate. Now the markets, there's an auto block here, another auto block here, except if they want to qualify this as a trade drive, like this high here, this high, and a third high here, except if that's going to be a trade drive. But we're really going to see after Monday's trading, okay, because we are currently above support level, except if Monday for some reason just closes bearish, okay, below this level, then it becomes a suspect. I'm going to just move to the sidelines. I want to see what markets would do. I would not try to speculate on the sell personally. I just want to see what the markets are going to do up until probably Wednesday CPI-ish, because it could be a trap if I say, okay, now they close here, okay, let's look for sell side here, and this is low resistance to corridor. No, I would not want to do that, because the weekly time frame itself, the integrity of the weekly chart will be maintained, and from the weekly time frame, it looks like gold is bullish, and I want to maintain that gold is bullish. So but of course, since we have levels, so we have this level here, we have this auto block here, and I want to see how Monday trades. I don't know how Monday is going to trade, but let's see how Monday, especially the overnight session. When I see the overnight session, see how overnight session trades. At least it's gonna preempt me to, my thought process or the things that I'm going to look for on Tuesday. Okay, and that's going to be. But gold bullish, and key levels here. This daily inversion fair value gap, this auto block here, and that's what it's gonna be like. So I hope you found this one insightful. Can you see here? I hope you found this one insightful. This is like minor buy side liquidity, minor drawn liquidity here. I hope you found this one insightful. These consecutive down close candles here, change in the state in delivery. If markets return into it, sponsorship, draw. Until the next one, be safe.